Amy Smith, and we're here at the Orlando Money Show. I'm a national speaker for Investors Business Daily, and I have with me David Auerbach, which is going to talk about a very exciting thing, which are REIT ETFs. So, David, lead us into this.
Thanks for having me. I appreciate it. So, REIT ETFs have been a very popular topic over the past couple of years. There are several ways to play the REIT space, and what better way to potentially get exposure to so many REITs than buying an ETF? For those that don't know, an ETF is an exchange-traded fund, and I like to say that an ETF would be what you call a publicly traded mutual fund. Unlike mutual funds, which are valued at the end of the day when they strike what they call the NAV at 4 o'clock, you could pull up a quote on an ETF, whether it's at 9:30 in the morning, 12 o'clock, or 2 o'clock in the afternoon, and see where can I buy and where can I sell this ETF. And now to take it a step further, you can play REITs as part of ETFs.
And by the way, we should say a REIT is?
A REIT is a real estate investment trust. It's an income-producing company that any of the rents that are generated by the company, 90% of the income that they earn is passed off to the shareholders in dividends.
Which is a great investment for those of you that have followed the home builders. I mean, this has been a very good sector now for quite some time.
And there is a home builder REIT ETF. It's run by a company called Hoya Real Estate. The ticker is HOMZ.
Okay.
Homes. It's one of the newest REIT ETFs that's out there. A couple other interesting ways to play the REIT ETF space. If you think about how Amazon has captured the market, there's a couple of REITs that were created to play the Amazon. They're started by a company called Pacer Benchmark. And so the three REITs that you could play that are INDS. INDS, which is the Industrial REIT ETF. There is SRVR, Server, which is to play the data centers and cloud aspects of that.
Okay.
And then the other one would be what they call retail, RTL, which is capturing a lot of the online components of the REIT industry.
Okay.
So that's three examples of how you could potentially play the REIT ETFs. Another great idea is there's a bunch of properties called net lease REITs.
Okay.
Net lease REITs would be what you would see in a shopping center, like what I call the out parcels that would have like the Jimmy John's sandwich shop.
Right.
Or a gym, or just some kind of a gas station is another great example. So there's a great net lease REIT ETF. There's only one that's out there, and the ticker is NETL. NETL. And it's grown. Most of these companies have come out in the past year or two. And so NETL is based out of Arizona by a gentleman that started a company called Store Capital. They came from a Warren Buffett, Berkshire Hathaway. They left one of his holdings called Store Capital and left to start this ETF just last year. One final idea. The newest REIT ETF that just came out was a conversion of an existing ETF last year. The ticker is RDOG.
RDOG?
RDOG. RDOG.
RDOG, okay.
So what RDOG is, they take 9 REIT sectors, so like office, retail, apartment, industrial, and they take the 5 highest dividend yielding names of those sectors.
I see.
So there's 45 names that make up this ETF. So it's more of a numbers game based on the yield of the underlying components, but it's a very unique play.
That's interesting. Can you give us one example maybe of a REIT in the last 18 months or something that's really, like what kind of percentages are we talking about with some of these ETFs?
So there's 2 great REITs that I can talk about that's had a great year so far. One of them is a company that's here in attendance called Safehold. SAFE is the ticker. Safehold. Safehold is a ground lease REIT. So you have an office building, they buy the underlying ground underneath the property. And upon maturity of the agreement, Safehold takes possession of the office property as well. As part of the agreement. The other interesting company to look at is a company called Innovative Industrial, IIPR. IIPR is the only cannabis REIT that's out there right now. And so it is also, I don't believe it's part of the INDS ETF, but it is going to be part of many of the cannabis ETFs that are out there because there's nobody doing what they're doing right now.
Interesting. All right, there you go. Little cannabis hint there. So if people want to get in touch with you, what would be a good way for them to reach out?
Sure, the best way to reach me is my email address. So it's David, David, Auerbach, AUER, B as in boy, ACH, at WEG1.com.
All right, so there's David Auerbach. We're talking about REITs, and what an interesting topic. Thank you so much.
Thank you for having me. I appreciate it.